Hi, I'm Ollie and I'm 22 years old and I started building an investment portfolio around November 2024 and I'm currently sitting just short of £7,500. So here's how I've built it with little to no income and been able to grow my wealth over time. Over this last year and a half of investing, I made a lot of mistakes, and as you can see, my portfolio has actually had a lot of ups and downs in it, and I'll get into exactly why they've happened along the way. So for context, I'm Ollie, I'm 22 years old, and I actually started investing whilst on placement, whilst I'm studying for my engineering degree. I actually started investing mainly because a lot of my managers and that showed me exactly what they were doing with their money and their pensions to further their wealth. So I learned a lot from this, and what I did was to start investing a small amount. I didn't have loads of money at the time. I invested a small amount fairly consistently and was able to do that for quite a while and saw some great returns. And then it slowly dropped off towards the end when I returned back to uni, but I'll get into exactly why. Before I go any further in the video, it's really important that I mention that everything I say in this video is purely my own opinion. Please don't take any of it as financial advice. I'm in no way a financial advisor. So anything I have said in this video is purely my own opinion. And before you invest, you should always do your own research, as capital is at risk when you're investing. So I'll jump onto my phone and show you exactly what my portfolio has done over the last 15 months and show you where the big mistakes I have made. So initially, when I first started investing, I actually made a big mistake of trying to get rich quick. So firstly, I actually put some money in. I tried CFD initially after trying day trading for a few years, after listening to all these perfect finance gurus on the internet telling me I could get rich quick. And in reality, I really couldn't. So after listening and, well, I actually showed a few of my managers and they were like, this is just crazy. And they showed me exactly what they'd been doing. And they built portfolios of 50, hundreds of thousands of pounds on a standard salary. And that was the first time I'd seen that real wealth could be made rather easily. So I'll show you exactly what I did. So within my stock and shares ISA, it's currently sitting now at £7,413, which I'm very happy with, and my total return is £1,882. So as you can see here on the screen, I actually have £300 still sitting in cash, but the majority of my money is already invested into two pies. So let me show you those pies. So I have a main holding, which holds 4 of my main ETFs, and I actually hold gold and silver in here as well. But that's where the majority of my money goes. I only put around 90% of my money into this. So the breakdown of this is 70% of it goes into the FTSE All World, the distributing version. Now I've had the accumulating version. I've flipped and changed between the two. And to be honest, I prefer the distributing version, especially when I pair it with JGGI. So the idea of this fund for me basically was to reduce my my diversity across the market. So initially I went for single stock picking. I had a few errors trying to do this, obviously. And then the more and more I read into it, the more and more I saw that actually being invested for a long time is one of my main benefits as a young investor. So the Vanguard FTSE All World is where I actually put around 70% of this pie. So it's 63% of my main overall portfolio. So currently, as you can see, I've got £4,360 into this and I'm up £148 or 3.53%. Now, the reason this is quite low is because actually over the time, I've kept swapping between either the accumulating or the distributing fund as I couldn't really decide what to do. But I finally now decided I want to stick with a distributing fund, mainly because I pair it with JGGI. So this fund, all this is here for really is for long-term growth. I'll hold this forever, hopefully. And the main reason I actually chose this was because after speaking to a lot of people that have been in the market far longer than me, they made me realise that my age is my actual main benefit and I could be invested into this ETF for 30 or 40 years. And over that sort of timescale, that will always beat trying to pick stocks. And even the likes of Warren Buffett can't beat that return over that amount of time. So after that, I actually also invest into JGGI. And this is the reason why I chose the distributing version and now sticking with this. That's because the JP Morgan Global Growth and Income Fund has a healthy 4% dividend that is obviously distributed. So in order to make it fair, I wanted to be able to get both of these out and then spread it equally back across the pie. And that's my main reason for it. But as you can see, my average price is 567.9 pence and it's currently at 583.1. And to be honest, the growth over the last year hasn't been amazing. It's actually performed worse than the S&P 500. But I actually quite like this fund and the healthy dividend is also quite nice to see as well. So I'm pretty happy with this and this makes up 20% of my main pie. So overall in the portfolio, that is 18%. And then finally, I also hold physical gold and physical silver. Now, I was very fortunate with physical silver. I actually brought in at the perfect time, or slightly, obviously not perfect, but very good time. I brought in around here in late August. So I brought in just before the price went extremely high. And when it got to the top, I sold off a fair few. And now I've slowly started increasing my parts of that into my pie again. So I'm now currently sitting at an average price of 4,419 pence and it's currently sitting at 5,300. So I'm up 20% on this. And then gold is much the same. That was I've actually increased this more. It obviously didn't go quite as high as silver, so I'm much closer and lesser return. It's 9%, but I'm still overall pretty happy with this. And to be honest, for silver and gold, these are sort of my hedge against inflation. And I think over the next 20 or 30 years, the price of these will inevitably go up as precious metals tend to. So I'm pretty happy with that, and that makes up 90% of my portfolio. And then I have 4 stock picks that I go for. So in a minute, I have Rolls-Royce, Microsoft, SoFi, and Uber. So initially I did have AMD as well, but I've sold that. And I've moved I also sold SoFi actually as well. I sold SoFi initially in around September when it was around a high price. And then fortunately by pure luck, it's dropped down and now I've invested again. And that brings me on to a good point of what actually happened to my portfolio. So if we go to the main graph here, you can see that in November, my portfolio actually sat at £8,300 and I had £6,000 invested as net deposits. And then after that, I withdrew money a few times and I actually ended up withdrawing nearly £4,000. Now, this was less than ideal, but the reason I had to do this is because I come back to university and a lot of my costs I hadn't really allowed for. I hadn't budgeted correctly and I couldn't stay consistent with my investments. So from there, what did I actually do? Well, I actually moved a lot of the money out and I set myself a new base point. And from that, I was able to pay off my debts without going into debt, and I could actually move my money in a more sensible way and invest in a sensible amount each month. So I now invest or aim to invest around £100 a week or £400 a month. And if I have any extra, then I add it in. Whereas initially I was trying to do £200 a week and it just wasn't sustainable for me. It was trying to put too much money in. But I'm pretty happy with that overall. As you can see, my new strategy now is not to try and pick stocks. I've moved away from that. I'm no longer trying to do CFD or any get-rich-quick schemes. I'm now setting myself up for a future plan by having well-diversified, long-term holdings that I can hold for a long amount of time. I still allow myself 10% to play within my portfolio for stock picks, but ultimately I want to keep this percentage around that percent, maybe 15%, but I want to keep it relatively small, as if whether it does well or does not so well is more down to luck than any sort of intelligence that I've used throughout it. I can pick semi-decent stocks, but ultimately over the next 30 to 40 years that I want to hold my portfolio, trying to pick stocks for that amount of time, we've seen throughout time that it's really hard to beat the market, let alone even equal it. So looking back at my portfolio, what would I do differently if I could go back to myself in November 2024 and explain what I've done? Well, initially I would have straight away said, right, focus on yourself, that growth in and having your money in the market for the longest amount of possible time is probably the best way I can do this, especially my young age. So I would have invested into a high diversified ETF like the FTSE All World or even the S&P 500 or something like that. Then secondly, I would have moved on to also limiting myself on to how much I actually invested each week. So obviously I started seeing it go green, so I got carried away and put more and more and more money to the point it wasn't sustainable. So actually going back and building that emergency fund and building yourself some short-term savings so that you don't have to withdraw from your investments would be a massive upside that I would look back to do. Then also, the final thing that I'd probably consider is to do a bit more research before jumping in would have probably been a sensible choice, as starting with CFD and trying to get rich quick schemes really wasn't the way to do it. So I'm really thankful for having my placement and speaking to people who have far more knowledge than I had about the stock market and being able to grow it from there. And that's it for this video. So if you've enjoyed listening to it, I'd really appreciate it if you could like and subscribe. And if you've enjoyed it, make sure to subscribe. And I'll be trying to do one of these videos every week and give regular portfolio updates, as well as other things I'm doing to try and build my wealth.